If you come to condo living from a home, the chances are you had a single homeowner policy that covered all or most of your insurance needs. In a condo association, there are two policies that interact. The first is the master policy, which is carried by the association and paid for by your HOA fees. It basically covers everything except your personal property. There are several exceptions, but for this video, they're not important. The second is your condo homeowners policy, also known as an HO6 policy. Of course, this is paid for by you and typically covers things like the replacement of personal property, liability, medical payments to others. The master policy has a $10,000 deductible that you could be responsible for paying unless you make sure that your personal HO6 policy works in conjunction with the master policy to minimize any out-of-pocket costs to you when either or both are needed. Your personal policy has a deductible. My policy has a $500 deductible. Yours may be more or may be less. To understand how they work, let's look at what happens in this example where the homeowner has a personal policy with $500 deductible. It's pretty straightforward. If a pipe bursts and causes $15,000 in damage to walls and floors and $10,000 to personal belongings, the personal policy will cover $9,500 of the personal property damage, and you would be responsible for the $500 deductible. The master policy will pay $5,000 towards the repair of the floor and walls, but the $10,000 deductible is your responsibility. If the homeowner's policy is a proper HO6 condo policy, it will pay the $10,000 deductible. Not having it would cost you $10,000. So check your policy, double check it with your insurance agent to make sure that you're covered properly. A good insurance agent will make sure that's the case, but somewhere out there, there's the best insurance agent in the world and the worst. Make sure that he or she is providing you with the correct coverage, and remember, caveat emptor.